Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, November 11th, 2023. It is 10 minutes after 10 a.m. Eastern Time as I'm starting the video, so we're a little over little over half hour into the trading day. And I want to do the usual updates, start with the equity markets, and just kind of briefly hit on the other trade ideas. The equity markets aren't everything. Never put all your eggs in one basket. Even though when you trade an index, you are in a sense diversified in that you're trading anywhere from 100 stocks in the Nasdaq 100, 500 in the Russell, or 500 in the S&P 500, and of course 2,000 in the Russell 2000, which I'll go over those indexes here. And then some of the individual stocks. I think it's a good time to do a video. And once again, important reminder, tomorrow morning, 8:30 a.m., an hour before the market opens, CPI. That's going to move the markets one way or the other. My thoughts, I'm kind of leaning towards a softer CPI, but again, charts are the charts, so let's trade those, and then we'll see how the market reacts to the news, and that may determine the next trend from there. Are we going to go up and build on this rally and go past, what I'm targeting, this 280 target on QQQ? Or will we go down and possibly kick off the next leg down in the bear market? So I'll talk on that a little bit. Let's start out here with QQQ, 60-minute chart. Check, 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 check across the board. Bullish falling wedge breakout, check. Rally into resistance, setting up this trading range, what I call the Christmas trading range in purple. Breakout of that, check. Next buy signal there. So buy signal 1, 2, and then this larger trading range. Breakout there, buy signal 3. Back test was objective entry 4, and now we just need to pop that recent high, which is also that 275.60ish target right there. So you can round it up to 276 if you want, and then that should take us up. I think today, I suspect, as I said before, we'll hit this target. I'd like to see that hit today. Again, always sell, my preference at least, sell a little shy of the actual resistance level that you're targeting. It's not unusual to see the sellers step in early. That's the case in almost all these targets. You can really zoom in tight to that 267 or 275.62, and you can see that's where they reversed, but that's where the resistance was. They reversed a hair shy. All right, so that's that. Looks good, but obviously, very obviously, very importantly, let me just make clear we got to pop these highs, and if and when we do, uh, then that would give us the next thrust up. Things to worry about or be concerned and watch: potential negative divergence. Should we make an equal or slightly higher high and then reverse, that could give us that 60-minute divergence, which could send us down. Could be the catalyst for the next trend down. So we'll watch that. Otherwise, divergences are quite often forming. They're what I call potential divergences, and then they get taken out. In the case of this, like I said before, the breakout of this trading range to me was quite bullish and would quite likely indicate more upside. Of course, the weekly charts still look like death, and I can still make a very good case that the market's about to plunge and take the next big leg down. And if it happens, you got to react. What happens after something like this, which I said earlier and multiple times in the last week or two, is textbook bullish. This building energy, a well-defined trading range, upside breakout. So this undoubtedly, I have zero doubt that this has cleared out a lot of short interest. A lot of shorts got burned on that, have been squeezed out and may continue to get squeezed out a little more. It's obviously sucked a lot of longs in, brought a lot of longs in. I shouldn't say sucked. I went in. You'll say what you want, but so a strong reversal. Should the Fed say something? A market. I'm sorry, not the Fed. Tomorrow is just CPI. The market's going to deduce or assume what the Fed will do based on the CPI number, but you don't want to see that. You don't want to try to stay long on that. If there's a big reversal again, where your stops are depends completely on your unique entry and your unique price target. I do want to add that the potential for quite a bit more, especially if we get a much softer than expected CPI number, then you could see quite a bit larger rally based on the technicals. I'm going to go through those in a second. All right, a lot of talk there on that, but let me just rifle through the charts here. Going back and forth, but that was the QQQ 60-minute chart we were looking at. This is the NQ NASDAQ 100 future 60-minute chart. There's the comparable bullish falling wedge. That was our first buy signal highlighted back here. Breakout right there, a breakout with the positive divergence, divergent low. Hit the first target, pulled back, put in a double bottom, extended the divergence, even more bullish. Bigger the divergence, typically the bigger the move. Went up, hit T2, T3, pulled back as expected that day to get a pullback. That was quite a run right there. And now again, just like QQQ, we need to power up and take out T3 here. Just like QQQ, we gotta, there's the potential. My job's to point this stuff out. We have divergence, so oh, I wanted to add this. I had it on another board. Here's a trend line. If you want to keep stops very tight today, if you've been, if you're profitable, been in this trade, there's a trend line in which to trigger a potential sell signal. I kind of suspect that if they take it down, it wouldn't surprise me to see them pop through it and maybe go a little fake out there. So it's up to you. The more room you give it, the more profits are given back if it's the real deal. But if you use too tight a stop, the powers that be, they see these things and they come down, they call it stop raid, they take it out, and then they run it up. All right, so that's that. I'm still favoring more upside right now, but again, ready to pivot on a dime if needed, if the markets tell me, if the charts tell me. ES, S&P 500, same thing, trading range right there, more of a triangle-ish pattern as I talked about, and you could draw a lot of lines here. Breakout, back test, just like the NASDAQ 100, and need to take out that previous high. That's the ES, S&P 500 futures. When I look at the ETF, which I do like to watch as well, textbook, everything has just been, I always say this, in a bear market, these, the technicals really shine. And my theory on that is because the vast majority of fund managers, professionals out there, institutional managers, they use fundamentals, trying to figure out where a stock or company is going, or where the economy is going based on fundamentals. And in an environment like this, with a rapidly changing macro environment, with rates going up quick and layoffs happening, the fundamentals are so blurry and change so fast. Their head spin. They don't know which way. They don't know up from down, and that's where technical analysis shines. It's been my experience in past bear markets and past corrections, and believe me, it works just as well. I give you guys a lot of bullish setups. It can work just as well for bullish trades, long trades. But again, in a bear market, that environment, why I love trading bear markets is the swings. You have these little, if you just look at what's happened this year or over the last year with the NASDAQ 100, you have, if you want to call it that, you've had a series of bear and bull markets, big double-digit drops and double-digit gains in short order. And we traded, not perfection, but near impunity, as good as you can, covering shorts, going long as an active trader. And so although the S&P, or I'm sorry, the NASDAQ 100 fell 37%, if you followed a lot of the trades, the in and out, the long and shorts, you've made a lot more than that. So, most people would be giddy to get 37% in 1 year, especially an investor. If you would have just shorted and tucked it away, but to amplify those gains by covering those shorts and gaming those bounces, getting back short, which we did each and every time at the 200s, including that one right there. You can't see because it happened in pre-market. All those highlighted as objective short entries. That's what swing trading's about. All right, so back to the charts. QQQ I already covered. I want to cover IWM now. I gave you SPY. Well, I was on SPY. Let me go back to that, make sure there it is. The beautiful top of the range is well defined there. 387.17 breakout, rally right into that 393-ish target, pull back. I mean, again, this has just been a gift that keeps giving. If you missed any of these, you missed that breakout, you had an objective re-entry on the back test, and now, boom, same thing. Now, you were getting to the point when I talk about the next buy signal or objective long entry. It's not for me. Because we're getting in what I call no man's land. No man's land is between support of the most objective entries down here where the wedges broke out, or at least I've been trading QQQ and or NQ and RTY, the small caps in the tech stocks. But right now I'm targeting near-term target, the downtrend line in 401. We're halfway there. We're in what I call no man's land. It's like tennis. You don't play the middle of the court. You either play back on the court, or if you're going to charge a net, you can play the net, but you don't play in the middle of the court. It's just impossible. They're going to lob it over your head. And you won't be able to get back and get there. So this is the negative divergence. You can see potential on SPY. If they take it out, the meaning if the PPO and the RSI make higher highs, then that's going to be bullish, and that will increase the odds that we're going to run up there to that 401-ish level right there, I think. So, and again, I want to just reiterate, there's the potential for more, because I'm scrolling back. That yellow downtrend line is the bear market trend line in the S&P 500. Turn on all the lines here. That's a busy chart. Let me turn them off and just hand draw it for you. So keep in mind that Amazon, some of those stocks that I've highlighted, there's a potential for a lot more than just 5% bounces. I've highlighted the potential for bounces well into the double digits. This is the bull market uptrend line. These are the 200 days. So throughout this bear market, sometimes and it's common to briefly take out, especially in the S&P. The QQQ has reacted off the 200 days a little better. S&P went a little bit above it. Perfect rejection there, a little bit above it. And so it could take those out. But remember, if it takes out the 200 days and then takes out the bear market downtrend line, you could see a substantially larger rally. I imagine there'd be a lot of buyers right there, a lot of short sellers covering. Of course, we want to watch the NASDAQ 100 as well, see if it does the same thing. It's been lagging behind. Jump back to QQQ, and you go here, draw out our primary downtrend line off the highs. Need my line tool. There you go, and it's right there it is. You can draw like that, or you can put it up there. Remember, we had a pre-market pop into there. So how do I have it drawn here? Yeah, I have it right in. It comes right in with the 200-day moving averages. So give or take. So again, it's a bounce target, but it's also an area where you have to be open to the fact that we could see a much bigger rally should that happen. Oh, hey, one thing I forgot to mention to you yesterday, among everything else, all the other bullish developments, is XLK. Remember, I've been watching those the sectors in the S&P 500. XLK by far the largest and most important, and we did get that bullish PPO crossover yesterday. I noticed it after I did the video. I figured I'd just tell you today. So there's the bullish crossover. That green histogram bar means the lines have crossed, and even higher today. So that's a check for the bulls right there as well, or another check mark, I should say. And remember, this is a trend indicator. Let me just not turn that off right now. Remember, this is caught. It's not perfect. There's some whipsaws here and there, but again, if you're looking bigger picture, you're a typical swing trader. You want to be short when the histogram is red, especially based on other things, trendline breaks, support resistance, and then long when it's green. Look at that. These are the little micro trends. I'm looking at these levels down here, green crossover, and you would have just slayed this bear market. And a little whipsaw. Even if you took that whipsaw, it's a tiny little red crossover. Even if you took it the next day, it said, "Hey, guess what? It was a whipsaw. Get back into your longs," and then milk the rest of that. And here it said, we were already short right there at the highs. Well, the crossover, and that's a good example. This came first, but that's not when. I was highlighting scaling into. I should correct myself. I had a zone here on QQQ and NQ that we started scaling into, and with the second lot or the highlighted short entry right there on that final pop, and then boom, and that was a nice drop. And so here we are. So wash, rinse, repeat. If the PPI does something like this and we go red, then hey, guess what? This was just a short rally. We caught all of it so far, or the bulk of it. And, maybe we'll get back if you decide to go home long today. I'll let you know. I'm kind of told you before. My plan was if we can get to 280 or close to it, to get out. And not have to worry about tomorrow, and I still may do that. And hey, remember, we may not even get there. I pointed out those 60-minute divergences that are starting to build. Let me park that PPO again. All right, let me move on to the small caps, and then I'll get to the market leaders and some of the other trade ideas. IWM, 60-minute chart. No, let me start out with the futures, because that's the one I gave you the update yesterday. T1 was hit yesterday. And again, this is just, like I say, textbook. You have such a well-defined resistance level there in that area of consolidation. Again, coiled spring stuff, right? Boom, 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 breakout, objective buy point. If you missed it, you had multiple opportunities yesterday morning and the previous afternoon to buy that back test. It held perfectly. I mean, no violation, right? Um, and then boom, another leg up. We hit T1 yesterday and we popped it today. So that would be a buy signal, and it is. However, you want to watch IWM as well. A lot of traders, especially during the regular session, are trading this one. And we've taken it out. We're a little bit above it, so that's good. As long as that holds, we hold above 180, 161 or so, 181, then that should be your next buy signal. No, here's an example of where you had divergence forming, but look, it's now been taken out. You have higher highs in these indicators, so that should take us up there, and maybe all the way up here. I could easily see a move up to that 189.20. We'll have to watch what the S&P and the Nasdaq 100 do. All right, and the trade ideas now. Okay, gosh, where to begin? Let's start with the big fangs. I'll run through them fast. And this, again, is not only to update these as individual trade ideas, but also more so a market update, because the market's not going anywhere without these guys, or anywhere big, I should say. Apple, moving up, so I've covered this many times. Break out of this bullish falling wedge, back test if you missed that, moving higher, and zigzagging up. So from the most simplistic view of this, we're in the early makings of an uptrend. No guarantees how long it'll last, but you have a higher highs, right? That's what an uptrend is, simply defined as any security making higher lows and higher highs. So we need to take out this high, and then that uptrend continues. You'll have, as with the Nasdaq 100, potential divergence. The bullish thing would be to see that divergence burn through. But as of now, looking good. And again, this listed as one of my favorites, my most favorite, as I made clear, of all the fangs was Amazon. And, it's up, it's already run off that divergent low about 14%. So, that's, if you have any or all of that, you can raise stops to protect profits. At least you don't want to see the stock fall back below this support zone. It was a resistance zone, now support zone. And this one looks good. I don't see that happening, but again, tomorrow can change that. Or even today, who knows? Maybe my read is wrong, and maybe they're going to dump this market hard and take profits at the end of the day. I don't think so, unless 280s hit. 280s hit, that's you'll probably see some profit taken on QQQ, that is. But there it is, a beautiful downtrend line, which to me looks like a magnet for prices and price resistance. I'm going to lower that right now, or put a second line. I have a line at 98, but you can see the couple reactions right here. So more of a zone about 96.50 to 98, and it comes in together. So this is what I call confluence of resistance, 3 levels in together. And of course, if it pops that, it would probably have a pullback first. But remember, this is what this is. If you just take a step back and look at the 60-minute chart, downtrend line, positive divergence, aka bullish divergence. That's a big bullish falling wedge pattern. And so break above that, and the pattern, you take the measured target of a pattern, you take the widest point of a wedge, add that to where the wedge breaks out, that's your measured target. So, as much as you might be happy right now, if you bought this one like I did, recently, and you're up 14, 15%, this thing could easily go up 43%, if that wedge breaks out. So I just want to lay that out there. And likewise, if it goes down, remember, we bought this here not just based on divergence. I always say positive divergence is not a buy signal. The reason I highlighted that as a buy, long-term, beautiful, what I kept calling beautiful long-term support here, $83 right there. Look at all that, back there, resistance and support, especially most recently. Positive divergence on the weekly chart. Again, that positive divergence. So I just showed you where it could carry to on the daily. Now let's play the what if game on the weekly here. Well, we bought it at 83. Here's a primary downtrend line right there. I might pull that downtrend line. I might give you an alternative one here in a second, but that'd be, well, depending if and when we got there. Of course, you're not going to get there straight away, but yeah, probably still in line with that 30-something%. So you can either draw this downtrend line right here. You can see off the high, of course, the bull market high. Pull it in, catch the top of this candle, or what I think is better to come in and catch that one as well. So there's the downtrend line. So that would be, if and when we got there, probably coincide with that 111 support, and that would be a run of, if I can grab that low right there, roughly about 39-40%. So that would be a max upside target right there. And again, if we crap out here, take out the lows, that means Amazon has the potential to break this support, and fewer things in trading are more bearish than a failed bullish setup like that. So if Amazon drops there, I don't have any really great support. I have some minor support right here at about 68, and I'll add that line if and when that one breaks. But as of now, it looks good. All right, so there's Amazon. We need to see Microsoft. Let me go back to the 60. Microsoft took out this resistance 231.36 day, now a little minor downtrend line, so that's a plus sign or a check mark. Amazon I already covered. Alphabet, let's go to the other share. Why are we looking at GOG? Let me go GOOGL. That one needs to pop this. Excuse me, right around 90, little over 90, 91. You have a couple reactions higher than that. It's a little more of a resistance zone than a hard level right there. So if we can pop this, boom, and there's a target. There's a downtrend line that comes in. I would also add, as I'm going to do right now, another resistance level right there, potential target. So, but remember, this is that same kind of basing pattern, right? This one hasn't broken out yet. This is a big market leader. So if you get this one breaking out too, that's just another big check mark for the markets, because Alphabet is one of the largest components of the S&P as well as the NASDAQ 100. And then last but not least, let me go back to QQQ, queue up my watch list here. Tesla. Tesla, look at that, popping right there. That's what I've been waiting for. This was also one of the three that I highlighted and took were Apple, Amazon, and Tesla to supplement my. At first, I told you they were initially hedges to my shorts, which I then later told you about a week or so ago I covered at the recent lows because I figured we'd do this. And now that's a breakout. So if that sticks, excuse me, I'm a little hoarse today. So if that sticks, then that should open the door for a move up here to the next target, about 136 and change. You had a few, look and see this. When I say if it sticks, you zoom in real close, you can see sometimes, and this is why if you're trading on a 60-minute chart, these are all wicks. I'm circling these little skinny part, that little stick part on top of the candle. That means inter-period you popped and then closed back on it. Popped, closed back on it or below it. Another inter-period break, and this candle's not yet finalized. And so, in fact, we've got a way to go. This is the 11 p.m. candle. It won't be, or 11 a.m. It won't be finalized. This was our opening candle from 9:30 to 10, and then every other candle after that, because it's a half-hour period. Then everyone's an hour, so that's 10 to 11. And so this one we could certainly fall back and close below there, and that would also be a pretty. It's a whipsaw or a failed breakout to those that don't wait for the 60-minute to finalize. When I see the 60-minute finalize, then that's going to increase the odds. It's going to go up there. But, with those divergences, it could still fail. So watch that. I'm just showing you levels to watch, and it'll, odds increase or decrease. It's that simple to me. They increase if we get the solid close above, and if we fall back down into the range, that decreases, and we could even go back down to the bottom of the range. That's what happens often when you finally get rejected off the top of a range. You go back down to the bottom. Alrighty. Just a few other updates. Let's start with silver. I'm not going to go too deep, but silver, highlighted this breakdown recently here. This is a 3-month, 60-minute chart on silver futures. Beautiful bearish rising wedge. It broke down, which I highlighted, but then I said right here, I said, you might want to wait because gold hasn't yet triggered a sell signal, and the dollar hasn't fallen to that down uptrend line, which I'll get to in a second. Said so maybe on a back test, that's what you might want to look for. We got the back test, so that was a nice short entry there. I highlighted again the other day. Good for about a 4% drop so far. I'm just measuring it out there. Take out that recent low, and we should get some even deeper selling. The dollar that I'm talking about, dollar index USDOLR. I was looking here on the daily chart and at this primary uptrend line right here, which we have now fallen to. And so, what this indicates, you have potential positive divergence. It's forming there, right? And we could go down. I think tomorrow's CPI number, if it comes in hotter than expected, that would indicate that the Fed's going to stay aggressive or hawkish, and we should reverse, and then that's going to be bearish for gold and silver, right? There's a trading range here too, and we just broke down from there. Again, we're right on or close enough to the line. However, if it comes in softer than expected, we're probably going to break that level and then come down here. And then we still have the potential to put in, you can see here, if we get one little thrust down through there, we still have the potential for divergent lows. So again, I remain in near to intermediate term bullish on the dollar, which is, looking for a pullback in gold and silver. It's just, are we going to get one little final wash down move, or is this it? We're at support. That's all I can tell you. So, my views are dollar up. It's just as we go up from right here on the trend line, or one more thrust down before we get a rally in the dollar. And so, let me try to process this. If it's this and the dollar starts rallying because the Fed's getting hawkish, that's going to mean the CPI came in hot tomorrow, and that might not help, which shouldn't help the stock market. So keep that in mind. We'll see. But again, I'm trading the equity indexes and the individual stocks on their own technicals. I'll obviously comment tomorrow on what the market does after the CPI report. Once trading gets underway, let's see what happens. Don't overreact to what happens at 8:30 in the morning. Wait and see when the big boys step on the field at 9:30. That's when most of the institutions start trading. There's more liquidity, and then we'll see which way the markets are going. But not just the dollar. You also have the two biggest components of the dollar index are the euro. Euro is at big resistance, and hence another reason I expect a reversal here. So this whole rise in the euro, remember the euro and gold are going to move inverse or positively correlated because the euro this is opposite the dollar. And so that was bullish for gold and silver, but we're at big resistance right here. Was a long-term target I had, 107,633. We hit it there, broke down, we hit it again, we're at resistance, and this is the level I've been calling for a pullback into the euro. Well, a couple things. I called for a back test of the trend line. We already got that. We back tested the trend line, but we can maybe come on back and for another back test at lower levels here, like this, and you have the intersecting uptrend line and the downtrend line. So if we got that, that's going to give us a correction in gold and silver as the euro falls and the dollar rises. And then last but not least, I always cover the euro. Don't forget the Japanese yen is the second largest. It's a distant second. It's only 13.6 versus the 57 or so percent weighting that the euro has on the dollar index. But look at this. This is a bullish chart. You have nice support right here, and this is the U.S. dollar Japanese yen pair. So nice support right there. Nice clean downtrend line, right? Positive divergence, right here. I'll draw it in for you. And so that says the most likely scenario is a breakout that means the dollar rallying against the euro. Remember, dollar up equals gold and silver down. And so, however, I always say this, support is support until less broken. We could break that support. If we do, there's also a longer term primary uptrend line right here. So you could get that last, and guys, I'm kind of leaning this way. we could get that last final washout move, one more draw, one more thrust down in the dollar before we get a reversal. Anyways, they're levels to watch, and we'll know tomorrow after the CPI, or we should have a good clue as to which way the dollar's going to go. Okay, long video, longer than I've been doing the short ones lately. I just wanted to update a few more trade ideas. I already covered the big fangs. I have some quite a few on my watch list. I'm just going to rifle through these in no particular order. KLAC, not my favorite, but getting a little frothy right here. You have put in a divergent high and a breakdown. The semis right now, look here. Oh, somebody asked about those. I'll give my opinion. There's SOX. SOX broke its bear market downtrend line. The semis have already broken out above its primary downtrend line. Put in a divergent high here. We're at resistance right now. PPO just made a bullish crossover. If it can hold this line, pop, we could run all the way up here to 424. That's about 424.60. Any pullback should be contained by this uptrend line. In anything more than that, it's probably going to send us down lower. That's what it looks like on a daily chart. Weekly, I still maintain this is T2 all the way back here before anyone knew we were in a bear market. I gave you bear market targets, and T1 was hit back here in the semis. This is T2 that I still wholly expect to be hit before all is said and done. You roll back, that's the entire. This is a uber significant uptrend line off the. This is the bull market in the semis. To me, by this metric, the semis are still in a bull market because they haven't taken out this bull market trend line. I should say I take that back. I think because they're going to go down and hit that and maybe even take that up. They've dropped 50% off the highs, but again, they've never violated. That was the trend line off the 2008 lows, and every time we pulled back to it. So it's a target I have, and I still maintain. So we still have more downside. And if that's confusing to you, to me, it's just a matter of we're going to bounce more before then and then go down there. Or are we going to break down soon? Yeah, I'm going to be light at the end of the day today, no matter what. Meaning, take some profits, hedge up, whether or not we hit 280 on QQQ. But that's what I want to show you on semis. Oh, and then I had other ones. I had Airbnb, ABNB. This one's a bullish setup here. You have nice positive divergence right there. Downtrend line. It's just trying to crack that trend line down. There's a little bit of price resistance as well. So think if it can pop about 90. Today's high pretty much about 91.40. This one could run. I'd have to give you targets. I don't have them here. I can tell you right there. That would be a first target about 191. So just shy of the 101 level. Maybe if things get really nice, all the way up here to about 130. Airbnb, that was that. RLY, O'Reilly. Just a setup. Watch for a break of this trend line as a short trade. And then I give you a couple levels. There's support, first target, 801. We'll call it 801, 802. If that breaks, there's a gap to be backfilled there. And then this is my preferred swing target, 746. So again, it's above trend right now. It's only a setup. Maybe wants to go another thrust up, put in another larger divergent high. Yeah, but still, if I don't have it, I'm going to set an alert. So that's when that one's a short. And when that trend line's taken out. KHC, again, these are just some standout trend line break. You can see the trend line there. And this one's kind of trades like natural gas, right? Trendy little sucker. You got these uptrend lines, they break, and you get powerful downtrends. So a break of this trend line would be, if I didn't already, I'm going to set an alert. Probably already have one, but can't hurt. Well, I could go through these. I have a lot of them. I'm not going to cover each and every one. That one already broke down. ENPH, MRVL, Marvel. This is a bullish setup right there, coming off a divergent low. It's still well below its trend line. DDOG, that one looked pretty nice here. You had a support. It just fell to support, so you could have made a case, and still could, to go long on around that 61.81 level. Target at least to move up to the downtrend line. If it breaks the downtrend line, because it has positive divergence, it could run all the way up here to either of these two targets, 86.50 or 96.20. It's going to entail the stock market rallying to get that, but that's certainly possible. Zoom, I already passed along to you. Little bullish falling wedge at or very near support. If you get another thrust down to 61.60, I think that's a buy as well. This one's kind of not going anywhere since breaking out yet. So, and it reversed a little shy of the 61.60 level. Maybe close enough, maybe not. But I already got that one out to you before. ALGN, Align Tech. Oh, actually, since I found it the other day, it's really running. Here's a uptrend line. Maybe if it pulls back to there, there's an objective add-on or new entry targets up there. CRM, Salesforce.com. Came off this support level right here, 125-ish, rallied right into the downtrend line. So it's at resistance. You don't want to buy it at resistance. You can buy a breakout above that level, ideally on a pullback to work off the near-term overbought conditions, but could break out at any time. Again, this is going to go in the a lot of these are tech stocks. This is software, so that's in the tech sector. And that would be your target up there, 166.55. So it's a matter of, are we going to get a nice run here in the markets? And if so, you have the 200-day moving averages up there, 166.50, or are the market's going to crap out and give us that final thrust down into these bear market targets here on QQQ, which is about 235 or so. Hopefully we'll have a good idea tomorrow which way this thing's going to go. Still leaning towards more upside as of now, but if I flip, I'll let you know. Looking at, I guess that's it. Let me stop the video here. It's long enough. Get it out to you guys, and then I will follow up with anything that anything else I see today. This has been Randy Finney with Right Side of the Chart. Have a good one.